Okay. Okay. So now it should now it should be okay. Okay, but I can't see the control room yet. Is everyone on? Can you see if everyone's on, Peter? Okay, 3 attendees are coming in. I see them slow. Hi guys, this is Mark. Sorry, we've had some technical difficulties. Please bear with us. While please tell me if you can hear me okay, if you can see the trading screen okay, my computer screen. Uh, Zafar says, should I kill the others? Yeah, if you can, we can just have a one-on-one here, Zafar. So I'm waiting I have a substantial delay on my end. George says, hi, Peter, loud and clear there. Zafar says yes and yes. So I can see some things here. Brad says yes. Kaz says all good. Trent, all good. Okay, so give me a moment. I really apologize, guys. We had an issue on the back end with our software. Anish says, yes, I can hear you and see the screen. Okay, cool. JD, yes. So it's okay. Peter, you still there? Okay. Says. Okay. Sergey says, hello, all good. All right, I'll wait a minute or two just for those who may have had some confusion here. So there are, okay, we've got 15 attendees. Okay, cool. It looks like most, oh, thanks, Trent. Trent says, no worries, no stress. I wish that was the case. I always stress out over these things. I like to be prompt and deliver what I say I do. So it always stresses me out when there's an issue beyond my control here. So thanks for bearing with me. Liz, good morning from Darwin. Good morning to you, Liz. So, okay, I think we can basically kick it off here. What I'm going to do is, I think the good place to do is start where we left off yesterday. Look at the trades we were looking at yesterday, review those and see how they did, and then see if there's anything else on a short list that we want to take a look at. So we were looking at the long Swiss franc versus Japanese yen trade, and this was something that I kind of suspected, even though we had this benign bar here, that we might get a burst out of this action, and indeed this is exactly what happened. Maybe a caveat, maybe I should pre-qualify what I'm trying to do for everybody here. So in the main, I'm looking for major moves that extend for days, weeks, and months. Now, of course, that doesn't happen all the time, and it's pretty rare. But that is my mindset. I'm like a panther sitting in the grass, looking at his prey, and waiting for these setups that will extend over time. And we've had a tremendous amount of range extension in a lot of currency pairs, stock indexes, gold, and things of that nature. And now we're in the kind of the middle of those ranges. Some of them have extended dramatically. You've had a huge trend in the Canadian dollar, and so it's not as easy. And so now you're just getting these moves that sorry, let me just close out some of these windows that are creating a little bit of clutter here in the background. Uh, so, uh, so again, when I see some opportunistic trades that we can just carve out 50 or 100 pips, sometimes the market environment is only as good as you can, get, and sometimes you can only take what it will give you. And 50, 100 pips, 200 pips is a great thing to have. But in the main, I'm looking for these bigger patterns, these bigger setups that extend for days and weeks. So when I see something like this, where I know we can get a quick 50, 100 pips. Maybe that's going to be the value of this session, where some of the things we talk about, you're welcome to go ahead and take on your own. But it's sometimes going to be very difficult to me to explain to the main, our main traders on an email, once a day. That's a little bit more static. So again, something like this, where I saw these reversal bars at the bottom of a huge trading range. And then of course we had this very benign little bit bar here. And again, sometimes these things look so benign, but you get these explosive moves that happen very quickly, but then they turn. But that's okay. I mean, if we can take something like that, that's what I'm on the lookout for. In addition to some of these larger trades. And I had my suspicions that we were looking at something like that yesterday, and that's exactly what happened. I think this extended for 100, 120 pips out of here, and may extend a little bit more. What I'm looking at also is that I think any upward move is going to be capped by this guy here. That's the reversal. That's going to be an overhang on any upward movement. And in the main, this is a downtrend. I am looking for the yen pairs to go, the yen to go stronger and the yen crosses to go weaker. So in the main, I'm going to be looking out for the yen pairs to go lower. Because the yen's going to get stronger and these other cross currencies are weakening. So the combination means that these pairs are probably going to decline over time. But that doesn't mean that we're not going to get opportunities like this where you get a quick counter trend move and there will be an opportunity to take a trade. And there was one last night, and we talked about this, and I just want to share with you in comparison, because we compared this yen trade, the Swiss versus the yen. We're talking about the Swiss franc versus the yen. We compared this against the Canadian dollar versus the yen yesterday. And again, as far as a teaching moment, etc., I said that I was less enthusiastic about the Canadian dollar versus the yen versus the Swiss yen, only because we didn't have any kind of build out away from this wall that it's just fallen in. And you can see, even though we had this big burst out of here, it reversed very quickly. And it turned tail, and so unless you were very quick to capture this, it wasn't as efficient and as sustained, because this has still sustained its up move here. It has not turned tail like the Canadian dollar, because we've had a build out away, if you will, from this wall where the market has had a chance. Let me just change colors here. To build away from this, this fall away, this giant wall that it's collapsed against. The market went down, but now we've had a chance to build away from that. So you get a coil, you get an action. So now you can see that there is an opportunity for this thing to turn, albeit even if it's in a small way. We could possibly capture a small move in a counter thing there, where in the Canadian dollar versus the Japanese yen, that was more difficult, because you didn't have that kind of build away, if you will. It just collapsed, and then this tonight it went up, and then now it's collapsed back down. So is that a little bit clearer to everybody? I mean, now that we have the hindsight of looking at how these trades developed after we talked about them, can you see that in order for trades to turn, that you kind of need to build away from the main trend? You need to create some coiling action, some energy, so that it provides room for any kind of move against the main trend. Do you see that? Just put your comments in the chat box. The trend says yep. I'm just going to wait. I'm on a substantial delay, so whenever you enter your comments, I feel like a bit of an idiot here, because I have to wait a little bit. So please confirm if you understand that. If you have remaining questions, we can spend some time, because it's pretty important. Again, the main trend in all of these things is a sustained downtrend, and it's very difficult to fade these trends. But sometimes you will get moves where, if you get let's say today we make a new low, close on the high. Now we've got two areas where the market made a new low, closed on the high, and we look like we might have some short-term support. We would also have a double bottom, and incrementally we're building away from this thing to provide room for this thing to move up if it is going to. And again, these aren't the kind of trades that I'm typically looking at, although I will say that when markets reverse from one direction to the other, that's when there's an awful lot of money to be made, on the turn, I call it. But you have to choose your moments. And this certainly isn't one in the Canadian dollar versus the Japanese yen just yet. There's a downtrend, and there's nothing to suggest a turnaround, where in the Swiss franc, Japanese yen, we did have a couple reversals in the same area. We had this little small, and the thing, even though this wasn't a reversal and this wasn't an inside day bar, what this is what I call an NR4 bar. So let me drill this back down and talk a little bit about this. And I should have been a little bit clear about this yesterday. So this bar here, where the range was very, very small, you can see the high and the low of the range yesterday was very, very small. And it was the smallest range from high to low in the 4 previous trading sessions, and frankly, and probably in the last 10 trading sessions. So it was like even in what I call an NR7. So it was the narrowest range in the previous at least 7 trading ranges or more. So sometimes, these things, indicate a change in direction. And like I said, even on a risk reward, if we had put our buy stop here, we wouldn't have had any heat, and we probably could have captured 100 pips. And who knows? I mean, this thing could still go up a little bit more, to test this area up here before we look at, failing. So these little NR4, NR7 bars at the bottom of ranges or the top of ranges are very, very important to keep an eye on. And again, at the bottom or top of a channel. So when you have, I call something like this a channel, something where you have a protracted move in one direction over days and weeks, and then at the bottom or the top of the channel, you just get this small little innocuous bar. And to the human eye, it looks like nothing really happened there. But those are often very, very pivotal turning points in markets. So certainly in this one here and in here, it turned out to be, certainly something of that nature. And we talked about that extensively. I had a feeling in my water yesterday. This is exactly what would happen. I just, again, am, on the hunt for, much more solid looking trades, and don't want to, overwhelm you guys. The problem is I'm looking at 30 different markets, and I see so much. I see so much within the complexion of the market. I see counter moves. I see moves ahead of the thing, and sometimes it's I overwhelm myself. So the idea here is that I'm trying to keep things simple and also drill down to probably the most high probability trades, but certainly on a risk reward basis. This was something that we talked about, and it ended up going in the direction that we talked about. So if there's no questions here, I'll just move on. So Trent Johansson said, so you put your buy stop on the last trading day's high. Yeah, so the idea would have been you could have put your buy stop right here over yesterday's high, put a sell stop at about unchanged, which was very, very narrow by definition of this narrow thing. And now you're still in the trend. I mean, yes, it went higher, but it failed. And so this is part also, guys, of what is going on in my mind, is that you're getting these broadside moves, but then you're failing very, very quickly. So if I wasn't, let's say I put my take profit by 1 or 2 pips above this thing and missed the take profit, all of a sudden it's now back in my face, and I missed that. And that's kind of what's going on here, is that even if we identify things, and this is kind of also in the the background of my mind when I identify trades now, I'm a little bit scared because of the environment is so volatile that intraday you get these huge moves, and if you're not absolutely correct within a half-hour space of time, it can be 180 pips the other way. I mean, we were very fortunate yesterday, last week, to take some GBP CAD trades and that Euro New Zealand trade where the take profit was in a great place. We captured 300 pips, and then a half hour later it was 180 pips lower than that. So that's kind of what's going on in my background now, in my head, when I'm trying to evaluate trades and evaluate this market environment. And so I'm kind of erring on the side of caution. And that's kind of cost me a little bit, but it's also helped me. So we've got 800 plus pips in the bag for January. I'm trying to protect that a little bit, and we're not going to get everything. What I'm trying to do in my objective for you guys is to give you confidence. The whole objective of these sessions is to have absolute confidence and conviction in the trades that you are looking at and are about to put in your broker platform by eliminating some other possibilities and then honing in on some very high probability trades. And does it mean that you're going to miss some? Absolutely. And the things that I miss, I see them ahead of time. We're going to talk about GBP and New Zealand dollar in a minute, which we missed, GBP CAD, which I missed. It kills me to miss those things. But, over time, sticking to the discipline is, going to serve you, much better. So anyhow, let me, I don't know what's going on here with this constant clutter. So let me just, hopefully that will eliminate that noise. Sorry about that. So that's Swiss franc, Japanese yen. Again, two things. As distinctive, for the Canadian dollar yen, we had this small build out here away from the primary wall. So we had room for a counter trend move. And also, sorry, I thought I closed down my email to get this interference. I apologize again. I thought I closed all this down. Okay, there we go. So, the importance of what we talked about yesterday is that we saw that there was a build out here to move away from this downtrend wall, so that there was, a place for this somewhat to move up. And then we also isolated this NR4 bar at the bottom of a channel, and together those provided for this. And I have a feeling that we're still going to get a bit of an extension up here. So it was a bit of a missed opportunity, but there's always another bus. And as long as you guys learn something, that's really kind of the objective here, to make high confidence trades over time. So unless there's any more questions on Swiss franc yen, let me just move on. Let's talk about the other trade. We were looking at long XAU USD, which is spot gold. Let's see what our call was there and how the market did. So again, we're still about an hour and a half away from closing, and the market did basically what I thought it would do. I thought even if it went lower, it probably would hit a pocket of support and go higher. So this is XAU USD, and again, we haven't closed yet. We had this inside day bar. Fortunately, the buy stop was not triggered, at least on my platform. The 1096 area was not hit, and I was not put in this trade. So we're going to cancel that pending order for tonight and reevaluate this thing. But for some reason, I still like gold. I want to see where it trades. You do have this, almost a double inside day bar, because the high and low of today is still within the high and low of the bigger bar just 3 sessions ago. And you have this other inside day bar here. So you almost have like a double inside day bar here today. I would like to see this thing close in the blue, a little bit above unchanged. But frankly, I still think it's worth sneaking in a buy stop above the high of today, because I think that this market looks like it's coiling, and doing one of these things where you've got this little cup and handle, if you will. So if you draw this whole thing out, this is we've got this double bottom, and again, this is extremely short term. We're looking at the daily, but and the main trend is down. But I think there's enough going on here where we broke under the neckline, and now what we've got in addition is called like a cup and handle thing, where it looks like here's the cup, and then here's the handle, and then anything above here, and we've got all this white space up here that for some reason I think is still going to be filled with some price action. So I think that all the analysis we did on XAU USD yesterday, gold, is still intact, and I still want to kind of probe the upside here. Again, oil made a new low today. Some of these other metals made a new low, and gold is hovering, above its old lows, a month or so ago. So we've got this bullish divergence. We've got these double inside day bars, and I'm still looking to probe the upside here. Again, no harm, no foul. We put our pending order in yesterday. We didn't get triggered, so we didn't lose money. So, no big deal. But my inclination is that I think this thing, still has a cup and handle, double bottom. There's enough going on here. We have these 2 inside day bars that I want to go ahead and sneak a pending order in on the buy side again tonight. So I think the analysis we did yesterday is still sound, and it has not been disproven just because the market went sideways today. In fact, to me, the more work it does, and we talked a lot about these other pairs that I thought need to do more work, go more sideways, give me, one more clue, and that will then make the integrity of our signal, even stronger when the market is ready to go. So I really like this, and does everybody see that? Please put a comment in the box if you agree with my analysis, if you have any questions on XAU USD. So I'm going to wait a moment. I'm like 45-second delayed by the time you put in a comment and I see it. So, okay, Trent says yes. Is Trent the only one communicating with me? Please let me know, guys. George says yes. Liz, all good. Okay, cool. So at least this is what I'm looking at again. So Brad says yes. Thanks for that. Let's move on. The next one we were looking at was long NZD Canadian dollar, New Zealand Canadian dollar last night. And we were ticked out of this one. We were stopped out, but to me, again, like this, the analysis to me is still good. And this is unfortunately what's going on in this environment, guys, is that you're hitting both sides of the ranges hard, and you're getting this tremendous volatility. So, the likelihood is that sometimes you're going to be right and still get stopped out, and then the market turns. And this is exactly what happened. So if you recall, we put our buy stop at the high yesterday. We got ticked into this thing, and we got stopped out at an acceptable risk. But then the market went down, more than our stop. So at that point, we were happy that we got out with an acceptable risk. And you remember, I just put a 0.5% risk on this. So, no harm, no foul. You just come back the next day and you look at it. And frankly, now the signal looks even better to me. We have what's called an outside key reversal in the direction of the trend. So again, you have an uptrend, you have this key reversal at a double bottom area, and now you have what I call an outside key reversal, where you took out both the low and the high of the previous day, and you're closing at the high. So, this is looking very robust, very strong. And the difficulty is that you're getting kind of closer to some resistance areas here. And in this environment, what I'm always afraid of is that you get these thrusts like you did last week, where it goes, tries here, and then 2 hours later you're back down there. So you got to be pretty judicious about your take profits and whatnot. But again, we're not going to be perfect. You just have to stick to what your methodology is, what your philosophy is. And on occasion you're going to get stopped out. It's not always going to work, and you just have to accept that as part of doing business. But as a trader, you have to know what your edge is, you have to know what your methodology is, and you primarily have to take your signals. So I look for, again, the condition or phase of the market, which has been confirmed. This is an uptrend. Then I look for a pattern, which we see this little double bottom reversal pattern here. And then we have this insurance day bar right here in the form of a outside key reversal in the direction of the trend. So I have to take this signal. If it doesn't work, if goes 50 points higher and then it reverses and I get stopped out, I just have to accept that as part of doing business, and take my signals when I see it. So I'm inclined to go back to the well one more time on NZD CAD. And again, we'll rule certain things in and out, and we'll look at some other choices to see how this stacks up relative to some other trades. But frankly, today's action only reinforces what we talked about yesterday, and makes the case stronger that this is still in an uptrend. And now today's action, what is done when I look at these, what I call insurance day bars, is that it flushes out the weak hands. So we made a thrust to the low, got all the weekends out, all the people who didn't really know why they want to be in this thing. And now we've closed and reversed in the opposite direction with the buyers firmly in control of today. So we'll have to see. We've got about an hour and a half to go before this closes, but we certainly look like we're going to close, you know, at the top quarter of the trading range for today. So, you know, I think we'll put that back on the list for today. So I'm going to take long Swiss franc yen out of the equation for, you know, today. I'm going to still leave XAU, USD, NZD CAD. This was the same analysis we did yesterday. And I think today's price actually only reinforced the analysis that we did yesterday and why I was looking in the direction that I was for these trades. So is that clear to everyone? Lauren said your screen is not clear. I'm trying to make it as big as I can, so I'm not sure how I could you know, make it any clearer for you, Lauren. Let's see. So Sergey said, would it not be better to put the buy stop on NZD CAD a little higher? There is an obstruction bar of January 7th. Okay, so these obstruction bars, I'm not sure if you're talking about this guy here. And this is maybe what impeded, you know, the price action yesterday. So this was kind of an obstruction bar here, if you will. And again, you can kind of overthink these things. And maybe I was guilty of that yesterday. We're going to look at GBP New Zealand in a minute and how that obstruction bar wasn't an obstruction. It actually clean went through all of that. So, you know, you don't really want to overthink it. I just want to, you know, make you guys aware of certain things. But in the main, you know, you want to go for your you know, your edge, and I think I didn't do that yesterday in the pound New Zealand dollar. So I, you know, give myself, you know, passing grades for XAU and New Zealand CAD, even though I was stopped out. You know, I think you know, this has been, my analysis has been reinforced, and it's just part of the volatility in the price action that sometimes we're just going to be stopped out and the market's going to continue in the direction we're looking at. But you know, if we stick to our discipline over time, things generally have worked out for me. So that's really the point here. I strive for perfection, but it's never going to happen. So let's look at you know, these trades from yesterday that I kind of overthought, and let's go. So we had these as a trades to consider. I had a lot of conflict about especially this one, and you know, I probably should have just kept things very simple and stuck to the script of, you know, my the way I trade and what I look at. You know, sometimes it's damned if you do, damned if you don't. You know, you see something and sometimes it hinders you, and then the next time it doesn't, and it can, you know, kind of get in the way. So, you know, yesterday I talked extensively that first off, this fulfilled the one phase that we look at. The phase and the condition of this market is clearly a downtrend within these parameters. So you can see that the market has been trading and channeling between these two trend lines, and that it's a downtrend. And then within the downtrend, a couple days ago, we saw this guy, key reversal, and then we saw, let me just change this, the inside day bar. And that combination to me is usually, you know, what I look for. You know, key reversal, you know, with a large range here, a you know, inside day bar in the direction of the trend that I'm looking at, and that just should be, you know, a no-brainer for me. You know, close your eyes and just take that every time. And I was kind of put off my game by this guy here. And again, I've seen, you know, when these, you know, bars appear, they do, you know, put a, you know, a kibosh on some of the things you're looking at. And I overthought it, but I did say, you know, yesterday that, you know, if this was good, that it was going to just go clean right through this thing. And that's exactly what's happened. And then additional to that, and why I was so conflicted, was that I thought that there was no basis for any reversal of any nature in this thing because of the weakness of the structure of these bars right at the bottom of this channel. So if, you know, these bars had, you know, looked something like this, where, you know, made a new low and then closed on the high, you know, that would have been one thing, and, you know, would have given rise or impetus to, you know, something that could have maybe continued. But because of the weakness, I feel very confident that these bars are going to get taken out. So instead of closing on their highs, they both, closed on their lows. They went down, and both bars at the bottom look like this. And yeah, the market, took off a little bit out of that, but that's not going to hold. So, all these things considered, I should have taken the signal short. And I kind of, beating myself up for that, because you had this key reversal on a very large scale basis. So to take this out, it was going to take a momentous move. Then you had the inside day thing, which was a further coil. And, now it looks like we're here. In addition to which, last week I also drew out this, you have this pattern that's, kind of defined itself down here. Let me just pick a color that we can find a contrast, where it's this kind of reverse triangle, where if you connect the highs with the lows, now you've kind of closed under this reverse triangle. You have all this white space here, and the likelihood this market is going to continue going down. So now what do I do? Okay, so in the main, I really want to stick to my discipline over time. I want to wait for a time where the risk reward is clearly in my favor and I can identify the risk. And the conflict I have here is that now we've cleaned through this thing, and I really feel that this thing is going to keep going. But it can go up here first, and then, maybe put a day or two here, and then go. So, in the main, I've got to stick to my discipline and wait for the next signal. I mean, we did close under here. We closed on the thing, and everything tells me that, this is going to go down in a hurry. And I just don't know where to assess my risk. So, this may go down and then may go up into the range and then fail. So, that's the danger with this trade right here. Now, it's not as high quality or high probability as it was yesterday, where we could put in a pending order at a certain place. Once it triggered, it was likely to just go through there clean, and we knew where to assess the risk. Today, I don't really know where to assess the risk, albeit the trade may even be a better one because we've cleared this little, reverse triangle, and, the likelihood is we're going to go to the support area in a hurry. So, you guys are in the know, on the inside here. You may want to put in a small trade. Assess the risk where, you put your, your stop loss at defined level away 50, 60 pips from unchanged, or some, it's fairly arbitrary at this stage. When I put my pending orders in, at these areas, my stop losses are not arbitrary. I don't have to overthink it. My whole thing is it should burst out of here, and if it comes through unchanged, I don't want it anymore. It can come through unchanged here and still mean nothing. It could go up, it could go down, and then fail, and it could probably do that within, the same day or whatnot. So it's not as clean, but however, this is a very weak market, and there's nothing really holding it up here. And I see that this is going to head to support, very, very quickly. So again, I'm not going to take the trade tonight, only because I'm sticking to the discipline of what I advocate to, my traders on a subscription level, where we look for a pattern, we look for an insurance day bar, and then I know where to assess the risk. And in this case, the train has kind of left the station. I'm pretty upset that I missed this one, but I'll just have to wait for the next, setup. And the markets are so choppy right now that, probably in hindsight, it may be a good thing. So that was pound New Zealand dollar. I kind of missed this one, overcomplicated it, and, somewhat missed this one. Just because, again, in my mind, the background of the market, there's just so much noise going on. I mean, let's look at, for instance, the euro versus the New Zealand dollar. You can see that, it's just a lot of chop that's going on here. And this is what's in my mind right now, guys. So, I'm trying to actually err on the side of caution, and I kind of failed with the pound New Zealand dollar there. It had everything that I look for. The trading condition was isolated. The downtrend was isolated. We had a key reversal. We had an inside day bar, and I was kind of scared by a boogeyman that in effect really, wasn't really there. So, kind of missed out on that one. So that was it for it. So again, now we're on Euro New Zealand dollar, which again broke out of this double bottom. I was kind of looking for another place to buy it. You know, if we reversed higher, that would have been a different look for me right now. Again, you've got a lot of this noise and confusion going on in a lot of trades. So that's why I'm really trying to stay above the fray and stay out of, you know, and especially a lot of these cross pairs, these exotic pairs, pound New Zealand, euro New Zealand, you know, you're just getting a lot of, you know, different static going on here that you can see, you know, these are big ranges up and down and over all over the place. And, you can beat yourself up for missing some of this stuff, but at the same time, we've avoided some of this also because we talked about this inside day bar and I thought it would have to go through here. And, you know, you can see that there's a lot of conflict. It goes through the high and low and closes in the middle and all over the place. So, this is what's going on in a lot of these markets. And for the main part, I'm trying to steer clear of all of that. And by the way, I'm eliminating some of these things along the way while I'm talking to you. So Euro New Zealand trade is not a trade for me tonight. Euro odd is not a trade for me tonight. There's just no pattern. There's nothing that I can get a hold of. You've got these huge range days and it's going all over the place. So I'm eliminating some while I'm talking to you. Let's look at the last one we had on our short list. And so I'm going to kind of take this off. I'm going to still leave this on trades to consider tonight. We'll just leave this on the short list so we can, keep looking at how that's doing, although I'm not putting on the high probability trades for tonight. The next one was GBP CAD, and kind of missed out on that one too, and somewhat overcomplicated, although you can see this is what I'm talking about. You have these huge ranges, and then all of a sudden, if you didn't quite catch the take profit, now it's 150 pips the other way. And I thought that it would be extremely difficult to get through all these prices seamlessly. Although again, this was a trade that somewhat was lined up for me. We had the key reversal at a resistance area. You had the inside day bar, so you did have that coil, if you will, that suppression right here, where you had a failure right here. Sorry, let me just change the color and make that a little bit clearer. So you had the failure here, key reversal. Again, the key reversal made a new high and closed closer to the low than it was the high, at a major area. And then you had the inside day bar. Probably should have pending order here, and maybe gone for a much shorter take profit. 100 pips would have been more than fair, even though it went 200 pips. But now you can see it's gone probably almost 160 pips the other way. So easy to beat yourself up, but you also avoid a lot of the noise and clutter of getting in. Although I think we would still have been ahead even if we got in here and it's trading here. We still could have taken out 60, 70 pips. So again, I'm not going to be able to capture every single move, even though I see certain things. I'm really at this point trying to err on the side of caution, just because you're getting these giant moves and then these moves are retracing intraday and they're going all over the place. And again, I'm looking for clean setups that I can really, in my mind, justify seeing that they could extend for days or weeks. And right now in my mind, I think gold kind of fits that bill. Going where I can see a setup here, I can see a bottom, I can see a rounding, and I can make the case for this thing sitting up here to 1130, 1140 a week or two from here, and sitting in here and knowing what I'm holding. And that's the other thing. I think so many times people are trading these 15-minute time frames or 5-minute time frames, which are really meaningful in the meaningless in the overall context. And then when the market kind of does something against them, they panic because they really don't know what they're holding. When I get in something like this and I get in at a double bottom with a cup and handle, and it clears the neckline and starts extending, I start feeling very comfortable why I'm in that trade, knowing why I'm in that trade. So that intraday, when it goes up $15 and then it retraces $10, I'm not panicking, because I know what I'm holding. And again, this kind of goes back to, we're trying to, come up with trades that we can feel very, very confident about. And I think that was, again, the whole gestalt of this exercise of, giving you guys this insight is to find trades that you can have absolute confidence in once you're in them. And once they start bouncing around, you know what you're holding and why you're holding it. And it's going to really take something to, get you out of that and rattle you in order to, shake your confidence in that trade. So is that discussion clear to everyone? Dave says you are human. Yeah, you're right, Dave. I am human, but I'm such a perfectionist. I see so much. I want to take it all, and and that's the conundrum sometimes with too much choice. So that's why I have to really know myself too. I just see so much. I can make a case for so many things. I can see 50 pip moves here and 75 pip moves there, and like Swiss franc, and I can take out moves all day long. But again, I'm trying to express to you guys, once a day in an email, I'm trying to focus on the bigger moves. And so it's I've got to find a way to discipline the whole process. So Naveed says yes. Dave says it's all good, my friend. Trent, thanks. George, Kaz, Brad, Liz, thanks for that support, guys. And yeah, so hopefully you're kind of feeling out what my thought process is, and again, trying to come up with high quality trades that we know when we're sitting in them that we can sustain the volatility. And this market is hugely volatile and creates a lot of questions in our mind while we're trading. And that's the thing. You want to, kind of eliminate a lot of questions and hold on to trades that you can defend. And I can defend my trades from last night, the spot gold, and even getting stopped out on the New Zealand dollar CAD, which ultimately went in the way that I thought it would. So, I can defend that trade. Let's quickly go through and eliminate certain things. Odd CAD, same thing as New Zealand CAD. We talked about this reversal inside day bar, why I didn't think this was a double top. And indeed, you can see it went a little bit lower and then turn tail went the other direction. And this is what's happening over and over again in a lot of markets. It has me very nervous. But that's why when they resolve themselves, it becomes more clear, and then it puts the risk reward in my favor. And that's really what I'm looking to do on an ongoing basis. I'm looking for these giant washouts, where I'm not a part of it. It takes place, and then, okay, I didn't get involved down here, but now I can get involved once, all, the weak hands have eliminated, and I can, get involved. So now we have a kind of a conundrum here where the Australian versus the Canadian dollar looks great. We have, an uptrend. We have the same kind of characteristics, a reversal bar here. We have a kind of an outside key reversal like we did in the New Zealand dollar. And so now it really comes down to, okay, we have the Australian Canada long as a prospect, and we should put that, on our short list here. So I'm going to eliminate this right now and put long odd CAD and we're just going to watch this. And we also have long New Zealand dollar CAD. I'm going to put this as a high probability trade because it has the same characteristics. And so now it really comes down to a process of elimination, and how and what I kind of do there is I say, okay, so we have a question of, is the Australian dollar stronger? Because we're both going, we're gonna get along one of these two, and they're both the the base currency versus the cross currency. So the question is, which one is stronger, since we're looking to go long? And then I go and I kind of see what's happening in the Australian dollar, New Zealand dollar, and it's kind of confusing because you really can't make it's really unchanged. So neither one is stronger or weaker at the moment. It's kind of going very sideways. I think over time, it looks like the New Zealand dollar is going to be stronger than the Australian dollar. If we look at the the weeklies, there's a lot of white space here. We have this reversal bar. So I think over time, the New Zealand dollar is going to be stronger. That this pair is going to go down, under this area here, get into this white space. And so over time, and the key phrase is over time, I see the Australian dollar being weaker than the New Zealand dollar. So if we want to go long one of these two pairs, I probably err on the side of going, long New Zealand dollar, Canadian dollar. Although, on any given day, one can be stronger than the other, and odd CAD looks, really good now. And for those of you, who want to maybe take, both trades with less risk, maybe 1/4% on both, because you never know which one might be the more robust one from day to day, you can do that too. So I like both odd CAD and New Zealand CAD for the same reasons. We're in a primary uptrend. We've flushed out a lot of the weak hands, and we have this outside key reversal today on a very large bar, which suggests that we're going to get another thrust up into the old highs very, very quickly. So I like both odd CAD and New Zealand CAD. You guys can take both. I'll probably advocate doing New Zealand dollar, Canadian dollar, and then tomorrow I'm going to come back and wish I did Australian dollar, Canadian dollar, and that's just the way it goes. All right, Australian dollar, Swiss, again, nothing really here. It's kind of going down, but it's a mess here, and I don't really see anything to do here. Australian dollar, Canadian dollar, yen. Again, we have some interim pockets of strength here. I think this is going to be a long-term downtrend. I think that this guy is going to, impede any upward momentum, and I just see a mess going on here, just consolidating the lows. We kind of cleaned out the support area. It's now retraced to the support area, and we may get a little bit more upward movement, but I think it's just going to be a mess up and back and forth, and nothing that I really want to be a part of there. I'm going to go through these things quickly, and if you have any questions, I'll just take them in a minute. So that's Australian dollar, New Zealand dollar. This is a mess. It's I see Australian dollar in a downtrend against New Zealand, but it's sideways now. Could it go up? It could go down. It could do anything. Not interested in this market. Australian dollar, kind of the same thing. It's a weak market. You have some support, at these old lows. We, caught a double bottom support here, which I thought would be clean. I got this whole clean trade from here to here, 285 pips back in October. You can check the old daily journals, in the members area for that trade. And so nothing really going on here. I expect this to go further down. I think this guy's here is going to put, this key reversal is going to put a kind of an overhead on any upward movement here, but we could just jerk around here for next couple of days or weeks, and we'll have to see. I'd be looking for another short sale somewhere in here, a key reversal or something to get short Australian dollar, US dollar, somewhere in there. Canadian yen we talked about, even though I thought we would, this would put a little bit of a limit on any downside action. We did have a huge break out of that, and now it's collapsed. And it's neither here nor there. It's pretty mature in a big downtrend, and I think these things are going to keep getting weaker, by the way. But I just want to get in at a more advantageous time. Swiss yen we talked about. I can see this thing going up and catching a bit of support here, or a lot of support. I mean, this could really surprise me and, go back another 200-300 pips, and I'll be really upset that I didn't get in on yesterday's narrow range day bar. But for now, I'm going to stay out of that. Euro odd we eliminated. Euro CAD. So here's another thing where, you've had this prolific uptrend, and now we have a reversal in the direction of the trend. And now the question is, do I want to take this, signal also? And again, you want to take all your signals, and this is a pretty key one. It's a great trend. This is a huge reversal bar. But, as these ranges get more and more extended, as the size of the ranges get bigger, my whole thing is that I want to get in areas of low volatility and get out when volatility expands. And when I mean volatility, we get these huge ranges and things of this nature. Maybe I'll kick myself tomorrow and I didn't take, this thing, because it's a huge, key reversal in the direction of a huge uptrend. I just think that this thing looks parabolic, meaning that's just gone straight up. I think my instinct just tells me I want to stay away from this. And I think, you could have something tomorrow where this thing goes up 100 or 200 pips and then maybe fails. And it may have been a great opportunity, take a lot of pips out on the upside there. So you guys can watch these things. And if you guys want to take some of these trades, I'm trying to put you in the direction, the major direction of these primary trends, and we're getting these key reversals, but we're getting these intraday kind of reversals that I can't manage on the structure I have with this, daily subscription. So, I'm just looking for these things that I can get in and look to sit in them for, days or weeks without feeling uncomfortable. And this looks, very prolific, and it is an uptrend. But I think I'm not going to put this, we can put this on our short list to watch. Long EURCAD. So I'm going to trades to consider as we keep our short list, and this will help me hone things over the week also. Euro Swiss, yeah, it's very noisy, cluttered market, static, sideways. I'm going to stay out of that. Pound was another kind of situation where, again, we hit both sides of this inside day bar yesterday. We had this area to get through, which we did, and now again, same as EuroCAD, we have these huge ranges, and looks very thrusty. But you've already had quite an enormous move, and as the ranges start extending, I think the risk goes higher. So like I said, I want to get in on areas like this where I can see a little reversal bar that to most people look like nothing. I can get in here and get in a trade and start having that trade work for me, and then everyone else is coming in over here, and I'm happy to hand the trade over to them. So I like to get in on low volatility and get out on higher volatility. And if I have to leave some on the table, for the next guy, that's fine. But I'm not looking to, get in right here. And I don't know if that's clear to everybody. We can have a discussion about that also. Euro yen, I also said that I thought we would get some support here. We had this reversal bar here, just like the Swiss franc. It was a choice yesterday between euro yen or Swiss franc yen. Either one kind of looked the same, and they both behaved the same way. But I think that you may just thrash around here, and then this thing turns back down. Again, I'm very bearish the yen cross pairs. I think the yen does go stronger over time, and that these yen cross pairs are very vulnerable to the downside. So kind of missed that one. And, again, these are shorter moves, 50, 70 pip moves, and they're great, but that's not really what I'm focusing on right now. Euro New Zealand, we eliminated, kind of very noisy right now. Euro USD, you have an outside reversal today. Again, you're in a trading range market, something that I don't really like getting involved in. It kind of goes up, down, breaks out, false breakouts. You've got all this, even if you were to break above here, you've got, this thing to the left that you've got to break through. And, I'm just going to monitor that. Although in my water, I feel the euro is going to keep going stronger, and we could see it over 111. I just feel that we are going to see a move higher in the euro US dollar, but for now I'm going to kind of stay away from this market. GBP odd, we talked about this yesterday. I like this short. This is a down channel. You have a reversal bar here, you have another one here, you had this inside day bar here, but we closed up here, and I thought you'd have a long way to travel. You had to get through all this thing, and you actually did. But now you've got all this price resistance here and support, and you could just get a lot of thrashing around in big ranges. And, so I'm going to kind of stay away from there. This was an opportunity, but again, you can't be everywhere. And this thing did indeed penetrate big time to the downside. Pound Swiss, same thing. Outside reversal lower. You have a head and shoulders top here. Here's the double top. You also had a head and shoulders with a drooping right shoulder, which means that these markets go down much faster. Let me just talk a little bit about what I just said. I don't want to go too quickly, because this is a a pattern that if you see, and I'll show you this pattern in another market real quick. And these very potent moves, and they so this is what I call, so first off, you had the double top here, right in this area. But you had the left shoulder here, and you kind of have a right shoulder that really wasn't even formed. I mean, the right shoulder kind of came in all the way here, all the way down. So you have what's I call a drooping neckline where, so this is the head, the left shoulder, and the right shoulder is way below the left shoulder. And you have a situation where So a neckline is where you connect all the lows, and typically, you know, when the left shoulder and the right shoulder are equal, the neckline looks something like this. But when you have a drooping neckline, when you connect the lows from the left shoulder to the right shoulder, you have something that looks like that, where it's drooping. It's you know, it's drooping from the left to the right, you know, huge. And these are usually spells a death knell for a market. Not only that the market is going to go lower, but it's going to go lower very, very quickly. So let me show you another example. So, you know, and these always look a little bit different, but, you know, once you start seeing that, and, you know, and you'll be able to identify it again, you can, you know, understand it. So here's another idea of what I call a, this is the Hong Kong, the Hang Seng stock market with a drooping neckline, if you will. So again, we have a situation where you have the left shoulder, and it looks a little bit different, you know, on each one. You know, you draw them out, but it's really the same thing. So if you know, typically when the left shoulder and the right shoulder, you connect the lows, the neckline looks something like that. But in this case, because the right shoulder is so much lower than the left shoulder, when you connect these lows, you get something like this. So as we saw in pound Swiss, what that looked like, not only did it fall out of this thing, but it fell out of it very, very quickly. So, you know, I'm looking for the same thing here. Can everyone see that? Is that something that you've seen before? Is that something that's kind of cool? Is that instructive to everyone? Again, it takes me about 45 seconds to get your comments, so I'm just going to take a sip of water and well, you know, let me understand if that's something that you understand. If that's, Dave says looks new. Yeah, it's called a drooping neckline, and it's really it's a head and shoulders technical formation, but the impact of this, the import, is so much more, because this means, you know, that this thing looks like not only like death, but that it's going to happen very, very quickly. And when you see something like this, it could be a substantial opportunity. So I don't know if this means, you know, that the rest of the world stock indexes are going to fall off a cliff. This is kind of a proxy for China. But and we do have a little reversal here, and, you know, maybe we'll get some support. But this is setting up as something very, very bad. And, you know, as we saw in pound Swiss, it could come off very, very quickly. Don says, I find it hard to identify head and shoulders. Well, yeah, sometimes, you know, again, it looks very different. We looked at pound Swiss and, you know, and this, and you know, it looked, but again, it's something where, you know, the top, you know, is up there, and so we'll just keep going through them, and hopefully you'll see them, and I'll point out others, you know, as I see them, and hopefully you'll see them, because yeah, it's always a little bit different. And sometimes when I say something's a double top, people say, well, you know, the top's not in the same area. It doesn't really have to be, you know, it's just you step back and you can see the main. So pound Swiss, it looked different, but it's kind of the same, where you have this is the weekly. And if we look at the daily, the shoulder actually never even formed. It just drooped and went all the way down, had some support, and then fell off a cliff. So we'll look for some other head and shoulders, so you can keep looking at them and identify. Here's an interim head and shoulder. So while we're talking about head and shoulders, why don't we just keep pointing them out so you can kind of understand what I'm looking at? And they all kind of look different. But, you know, if you kind of look carefully, and the more we do this, hopefully the more you'll learn and understand. And when you see them, you'll be able to identify them on your own. So I don't know if everyone can see the head and shoulders within what I'm going to draw out here, but here it is. Here's the left, here's the apex, here's the right. And in this case, the left and the right were pretty much equivalent. So when we draw the lows, the neckline, you know, it's pretty much the straight neckline. Notwithstanding, this thing fell out of bed hard out of this thing. But once you see these head and shoulders, they're bear patterns, and they typically mean the same thing. So once you identify these head and shoulders, they have very, very bearish consequences. And in this case, you can see how bearish. So in the Hang Seng and the pound Swiss, we have these setups of head and shoulders, and you see what can happen when these technical formations happen. You know, I saw this in gold, you know, several months ago, made a lot of money in gold from a head and shoulders pattern like this. So pound yen, while we're on it, again, it's already, you know, made a huge move. We've had a huge key reversal. Again, I want to see more pent up energy before I'm looking to go short. But again, I'm looking for the major direction of these yen cross pairs to keep going lower over time. I'm just looking for a better place to get in them, guys, where the risk reward is more favorable. So pound New Zealand we talked about, pound US. Kind of, we have an outside reversal down. This thing keeps making new lows, you know, and surprising everyone. This thing broke out of a long-term descending wedge. Took a long time to mature, but when it did, you know, these you know, technical formations have such import that when they do break, you get these extended moves that people keep on waiting for them to end, and you know, they don't, because you know the setup was already baked in the cake well before then. And that's the import of looking at these technical formations. When you see these descending wedges like this, I mean, this took forever to mature, but the more time it takes to mature and get into this white space, when they finally break out of here, and you do get some false breakouts along the way, when they finally do, that's when you need to jump on it with all you know, with both hands, and ride them for as long as you can. And this is what I'm always looking for. This is what I look to get a part of. So, you know, these interim things where I might miss a pound New Zealand here or there just because, you know, you get, you know, these quick breakouts, that's really kind of not what I'm looking for. But these don't happen all the time. This took years to, you know, build to this position, and then it takes a few weeks, and, you know, and then it's over. So that's the kind of thing about trading. You have to be very attentive to these technical formations, and the more we spend, you know, looking at them, the more you'll, you know, be able to identify them on your own. I want to kind of wrap this up in about 15, 20 minutes, because, you know, yesterday I got into a situation where I was really up against a deadline to get my signals out to everyone. So let me just go through everything very quickly. I think we've covered most things I want to look at. The stock market is in a situation where we made a key reversal lower today into support. We're still messing around. I still think that maybe we, you know, have some support here, but this looks, you know, very bad. Looking at that Hong Kong stock market where we have that drooping, you know, neckline, I think that, you know, we have some serious problems in the stock market. This could keep going lower. You know, most people are not familiar with trading stock indexes, so, you know, I am pretty hesitant about, you know, putting out signals for them. But you know, this has already fallen off quite a bit. We're kind of down here. I'd like to see a little bit more pent-up energy before I really have a high probability short there, but it looks bad, and we had an outside key reversal today, so the likelihood is, you know, we might go lower, although we do have a little gap up here, and we'll see how that goes. But I'm kind of staying out of the stock indexes for today. New Zealand, Canada, we talked about. See, it's a little bit off the lows, which is kind of good. And we'll have to see how it closes, but it still, I think, fits within what I'm looking for. You know, uptrend, key reversal, double bottom here, outside key reversal. So the likelihood is, you know, I'll advocate going back to the well in this one more time. New Zealand dollar, Japanese yen, I'm looking for this pair to come off hard. The more this thing goes up, the more excited I am. You know, I'd like to get a trade in somewhere up here where you get another key reversal in this area, that we can, you know, get some pent up energy to, you know, have another try at getting through these prices. But I'm looking at all these yen pairs going lower over time. New Zealand dollar, same thing. We have this double bottom. It's kind of supporting at the, you know, the apex here. You know, again, this thing is probably going to put an overhang on any upside movement. And again, I'm looking to get short this, but there's no trade that I can find today for New Zealand dollar, US dollar. S&P, kind of the same thing. Let's look at the Canadian dollar. Again, this, you know, all these Canadian cross pairs, this, you know, pair is very weak against the US dollar. And we have the same thing today where, you know, made a reversal and went higher. The only thing that concerns me is that, you know, we opened the week at the very high, and it never exceeded that. So that kind of concerns me. It also concerns me for maybe the New Zealand dollar, Canadian dollar trade. And I'll talk about that in a minute. So let's see, yen. Again, I'm looking for dollar yen to go lower. We may have a reversal today. The more this thing works and solidifies here, I'm going to be looking for the next inside day bar reversal to get short dollar yen. So I'm looking for the yen to go stronger against all these pairs over time, and I'm going to be looking for signals there. Swiss franc, kind of a murky picture here. I thought it might break out yesterday. We talked about it, broke out a little bit, then broke back. Again, this is what you're getting, a lot of confusion in the markets. You're getting this triangle here. So, this is great. The more work it does here, the more we're going to get a much clearer signal when it's ready to, break. And I think this thing looks like it's, should break to the upside, fill some of this white space here. So, tomorrow if we get an inside day bar or something, we, could be ready to play that on the upside, but nothing today. And that's about it. Oil market made new low, outside key reversal. So, there's nothing that suggests this thing's turning around. There's no reason to catch a falling knife. You now have an outside key reversal into new lows, and this may be a good trade, into certainly a newer low for the next session. So that's about all the markets. Liz says these examples are great. Naveed agreed. Is there anything else you guys would like to talk about? Any questions? So here's the conundrum. We're looking at the New Zealand dollar, Canadian dollar tonight. And I'm inclined, like I said, there are some questions I have. You need to take every signal. And could we have a situation where it bursts higher, and then, comes back in our face? That's the possibility. That's why I advocate, keeping fairly low risk. But I think I've got to take my signal here and go long at a new high with a stop, loss pretty closely under. So let's talk about, that specific trade. And let's talk about the first parameters right there. So we're looking at New Zealand dollar, Canadian dollar. So we've got a situation where the high now is 0.94557, call it 94556. So we're going to put a buy stop at 0.9457. The current price is 94.37. So typically, I like to give it between 25 and 35 pips, below the close, the unchanged level. So that would put us around 94.03. 0.9403. So it's a 54 pip risk. And again, I'm going to target somewhere near the upside here, 95.72, something below that, say 90, what are we looking at, 95.72, let's say 95.37. Actually, I want to have a little higher risk reward here. So we're risking 54 pips. I want to make at least, 1.5 to 1. So that's what, 75 to 100. So 95.57. Let's shoot for 100 pips. 95.57 as an upside target. I think it actually could exceed that. So that's about 2 to 1 risk reward. So this trade would be a buy stop at 9457, a risk of 9403, and an upside potential of 9557. And let's see what that looks like on the profit calculator here. So my account is roughly 28,500. Demo account. The risk ratio is 0.5%. We're risking 54 pips. The pair is New Zealand dollar, Canadian dollar. We're going to calculate that. And so I can do 0.384 lots. 0.384. So I'm going to be efficient and enter that with you guys on the, let's see, New Zealand dollar, Canadian dollar. Where is this? Sorry, I have this, all over the place. So here it is. So we're going to enter this order of 0.384, 0.384 lots. Pending order at 9457. Stop loss at 9403. Take profit 9557. Okay, I'm going to get rid of the gold trade from yesterday. And so we're on board with that. Let's see, Dawn. Okay, so how do we look for the risk on spot gold? Okay, so let's look at spot gold. So let's take a look at this spot gold trade, where it's trading. You know, it's not trading, you know, it looks like it's falling off here. And, you know, so the parameters are kind of changing for me. You can see that the close is fading. And I kind of don't like the look of this right now. It's kind of rolling over. And, you know, even if it were to go up here, I think I'm going to withhold XAU USD. Now, again, I wait probably about 10 minutes before to about a half an hour from here. So if I do change my mind, you know, you'll see it in the list there, but kind of don't like the way this is fading on the close. It's kind of looking like weaker. It's almost like a reversal lower. I can't really make a case for it going down, but you know, it's kind of changed its context for me. But again, you know, if it just goes up a little bit higher, the whole complexion of the trade will look different. So I'm actually going to abstain from that for now. But in a half hour or so, I'm going to, you know, see how that looks. And then sometimes, see, this looked a whole lot different by 4 o'clock. So, you know, these Netdanya charts close at 2 hours from when the from where the Ninja Trader. So I'm trying to reduce this so you can see it, but it won't allow me to do certain things, so it's not clear. So by the time this closed on Netdanya, you know, at 4 o'clock, it looked much different than when we were looking at it. You can see it closed much closer to the high than when we were looking at on the Ninja Trader charts. And that's why I was kind of ambivalent when we were talking about it. But on the later close, it looked, you know, much better. So sometimes when I'm a little bit ambivalent, like I am about gold, what I really like to do is wait another 2 hours till about 4 o'clock for the next closing on the Asian session. So sometimes you guys get a little jumpy, you know, sometimes you're on the UK, you know, sessions, you want to go to sleep and you're saying, where are my emails and whatnot. And so I'm really waiting to see how something closes. And it can, you know, mean all the difference just that couple of hours as it did in the Swiss franc, Japanese yen. And gold may turn out to be the same thing, where right now I'm not excited about where it closes, but 2 hours from now, it can completely change. So, you know, I don't think we, you know, hurt ourselves by putting a pending order here, because if this thing fails, then we're not going to get triggered in. And if it doesn't and surprises us to the upside, then we can still be triggered in that move. But the way it's, you know, closing right now, I would prefer, you know, to, again, err on the side of caution and abstain. So that's my rationale there. Just so, you know, hopefully you guys understand that. I want to try and accommodate everything, but again, you know, the market doesn't care about our schedule. It's going to go on the pace that it wants. So NZD CAD right now looks good. Odd CAD looks good. You know, were there anything else that we were looking at? GBP New Zealand, long euro. So yeah, the remaining questions were Euro CAD and GBP CAD. I mean, very extended moves. You know, again, you know, I'm kind of, you know, I don't know if I want to jump on that trade. So kind of going to stop, you know, might regret that tomorrow, because this thing is a very meaningful uptrend, and, you know, it looks very robust, and you want to, you know, keep it, you want to take every signal, you know, within your thing. But again, my instincts are telling me kind of stay on the sidelines there. So not very exciting. I understand that. We've had a lot of movement in earlier part of the month. Now we're just ranging all over the place. I want to stay above the fray and out of a lot of the mess. And that's why, again, try and hone in on things that are very selective, and hopefully this process, is helpful toward that end. And please put your comments, in the box, how you feel about this. If there are any other trades you want to look at, I'm happy to spend, another 10 minutes or so, on the call with this discussion. So I'll just wait for some of your comments to trickle in. Otherwise, probably a good place to wrap it up. I know it's not terribly exciting, but hopefully this process, is going to be helpful, if nothing else, just to keep eliminating stuff. So everyone's focusing on, doing more trades. And frankly, I want to keep eliminating things. So we can just find the forest for the trees and focusing on those trades that are going to make us a lot of money over time. I don't see any comments. Are you guys hearing me? Are you guys hearing? I'm not seeing any comments. Again, I'm way below, behind. Okay, so Dave says yes. Let me know if there's any other things, any confusion you might have, any technical things. Liz says yes, so you can hear me. Is there anything else you guys want to talk about? Are we clear for? Anish says yes. George says yes. Are there any trades that you guys are looking at that maybe I'm not, missing? Are there any trades that you may be excited about and want to have a second opinion on, or anything like that? I'd be happy to spend another 10 minutes or so. Otherwise, I think it's a good place to wrap it up. I realize that, again, we have a pretty topsy-turvy environment here. It's now kind of gone into more of a consolidation phase. And again, as Warren Buffett says, the markets are not supposed to be exciting. You want markets to be boring. You want trading to be boring. If you're craving action, then you really got to understand that and understand the motivation that you're in. So I know that this isn't sometimes light it up type of thing, but hopefully this is an enlightening discussion, and you guys are getting the value that you signed up for. Naveed said it's good. So okay, if you guys don't want to discuss anything else, if there's any other markets, we can again pick this up tomorrow, see how we did, give us a report card. So we stayed out of some good markets today. I didn't get in the pound New Zealand, which I really would have liked to have. But on balance, again, just keep honing this process down, and this keeps us honest. So Dave says, I'm way past the looking for action phase in my trading. That's great, Dave. So again, hopefully this was helpful to everybody. If you have any questions that come up, you can again present them tomorrow. We'll have a lot of time to spend together, and keep honing in on these opportunities. And I'm thinking maybe in the second week, maybe a good exercise would be for, instead of me to start the thing off, is maybe for you guys to suggest some trades consistent with maybe what you're learning here, or some other things, and we can take a look at that and break that apart and go backwards. So that may be a good format. Let me know if that's an interest to you also. So HP says, thanks, Mark. Definitely helping with my learning curve. That's what this is all about. So that's what I'm trying to accomplish here. So if that's it, guys, I'm going to wrap it up, get my signals out to everybody in time. And it looks like we're just got the one signal. I'm going to wait a little bit to monitor how gold is doing, but it's kind of fallen off here. It's going back into this consolidation. And right now, this is just a sideways market. Sometimes, I see things, and sometimes you're not sure if you're seeing things that are really real or things that you just want to happen. And so I'm not going to chase the market. So Hawk Them says, thank you from Singapore. Wow, it must be early in the morning for you. Thanks for staying on so long. Anish says, thanks. You're all welcome. Liz, you're welcome. And I will speak to you all tomorrow. So have a great trading day. Bye-bye now.